ETF stands for Exchange Traded Fund, but don't let the name scare you. Think of an ETF like a basket of investments. Instead of buying one stock, like Apple or Tesla, an ETF lets you buy hundreds of stocks all at once inside one investment. Example: buy one share of an ETF like VO or SPY. Instantly own tiny pieces of 500 of the biggest US companies. It's like buying the whole grocery store instead of just an apple. And here's the best part: ETFs trade like stocks, so they're easy to buy and sell anytime the market's open. Why ETFs are great for beginners? Built-in diversification. One ETF. Many companies. Less risk. Low cost. Most ETFs have very small fees, sometimes under 0.1%. No stock picking required. You're investing in the whole market or sector, not gambling on one winner. Great for long-term growth, especially index ETFs that track the entire market like the S&P 500. If mutual funds are like old-school CDs you buy from a bank, ETFs are like playlists on Spotify, flexible, fast, and made to fit your vibe. When you're starting out, it's easy to confuse ETFs, stocks, and mutual funds, so let's break them down with a simple comparison. ETFs versus individual stocks. Stocks. You're buying one single company, like Apple. ETFs. You're buying a group of companies packaged into one investment. Think of it like this: buying a stock is like betting on one horse. Buying an ETF is like owning the whole racetrack. That means you're less likely to lose big if one company has a bad year. ETFs spread out the risk, and that's huge for new investors. ETFs versus mutual funds. Both ETFs and mutual funds bundle lots of investments together. But here's how ETFs win for most beginners. So if you want low fees, easy access, and control over when you buy or sell, ETFs are your friend. Most first-time investors lose steam because they're overwhelmed. ETFs strip away that confusion and give you a tool that's diversified, simple, liquid, and beginner-friendly. So now you understand what an ETF is and why it's beginner-friendly. Next step: how do you actually pick one? Let's simplify the process with 3 smart filters. Pick your type. What are you investing in? ETFs come in many flavors. Start with broad, safe options. Index ETFs. Track big benchmarks like the S&P 500. Example: VOO, SPY, or IVV. Perfect for long-term growth with minimal effort. Total market ETFs. Give you access to all US stocks, large, mid, small cap. Example: VTI, international ETFs. Exposure to markets outside the US. Example: VEXUS, VEA. Tip: most beginners stick to the S&P 500 or total market ETFs to start. Check the expense ratio. This is the fee you pay the fund to manage your investment. Good rule: anything below 0.20% is great. Some of the best ETFs charge 0.03% or less. That's 30 cents per $1,000 invested. Lower fees, more money stays in your pocket, compounding over time. Look at the volume and longevity. Choose ETFs that have high trading volume, makes it easy to buy, sell, have been around for at least a few years, come from trusted providers like Vanguard, iShares, or Schwab. These are signs of stability and trustworthiness. Remember, don't overcomplicate this. You don't need 20 ETFs. You don't need to chase the best performer. Pick one solid, diversified ETF and start there. So now you've got your eye on a great beginner ETF. Maybe it's VOO, VTI, or IVV. Now comes the fun part: actually buying it. Let's walk through the process step by step. Open a brokerage account. This is where you'll hold and manage your investments. Trusted beginner-friendly brokerages. Fidelity, Charles Schwab, Vanguard, Robinhood or Webull, good for mobile users but not always best for long-term investing. Most accounts take just 10-15 minutes to set up. Tip: choose a Roth IRA or taxable brokerage account depending on your goals. Search for the ETF by ticker. Once your account is open and funded, go to the search bar and type the ETF ticker symbol, like VOO, SAR Vanguard, S&P 500, VTI, SAR Total US Stock Market, IVV, SAR iShares, S&P 500. These tickers are like stock nicknames, quick and universal. Decide how much to invest. You can buy full shares or fractional shares. Most platforms support this. Example: if VOO is $400 per share and you only have $100 to start, no problem. Just buy $100 worth. Don't wait until you have enough. Start where you are. Place a market order. Choose Buy. Select Market Order for instant purchase at current price. Fine for beginners. Confirm your trade boom. You now own your first ETF. Set up automatic monthly contributions. Even $50 per month builds momentum and turns investing into a habit. This is how wealth begins. Consistent, simple, automatic. So you've bought your first ETF. Now what? Here's what to expect, and how to avoid the most common beginner mistakes. The market will fluctuate. Don't panic. One week it's up, the next week it's down. That's normal. Remember, ETFs are long-term tools, not quick wins. If you're constantly checking your portfolio, you'll stress yourself out. Instead of obsessing, remind yourself, I'm not investing for this month. I'm investing for the next 10, 30 years. Dividends may be reinvested. Many ETFs pay dividends, tiny payouts from the companies inside the fund. If you have dividend reinvestment, DRIP, turned on, those payments will automatically buy more ETF shares, helping your money compound faster over time. It's free growth. Let it roll. Stay consistent, not perfect. Don't worry if you can't invest a lot at first. $25, $50, or $100 per month is more than enough to build the habit. What matters most is that you stay consistent, patient, unemotional. Because investing success isn't about timing the market, it's about time in the market. Let's zoom out for a second. You didn't just learn about ETFs today. You didn't just open a brokerage account. You didn't just buy an investment. You planted a seed, and like all seeds, it won't grow overnight. But give it time. Water it regularly. Let it compound. And years from now, you'll look back and realize this was the moment your wealth journey began. Because real wealth isn't built on hype or hustle. It's built on clarity, consistency, and calm decision-making. And that's exactly what ETFs give you. Clarity, you know what you're investing in. Consistency, you can invest monthly without stress. Calm, you're not gambling, you're building. You don't need to be a stock-picking genius. You just need a system. And now you've got one. If this video helped you take your first step, hit subscribe, smash that like button, and share this with someone who's been thinking about investing for way too long. We've got more beginner-friendly investing content coming every week. And at Health Wealth Investor, we believe wealth isn't built on luck. It's built on habits. And yours just got stronger. Let's build together. See you in the next episode.